Hey, what's going on? Samuel Joseph here for Elevate Forex, and today we're going to be talking about order blocks. All right. So by the end of this class, you should know what order blocks are. Some people call them supply and demand zones, not supply and demand. Supply and demand refers to something different. Zones, where you most likely see supply and demand happen. So at the end of this video, you should understand what order blocks are. You should know the different types of order blocks, and we should have an idea of, or you should have a solid rule system or a solid set of rules to engage while using order blocks for your trading. All right. So one other important thing is you should understand that as a smart money trader or trying to trade institutionally, trading the institutional method, it's more important to understand the concept, the narrative behind some of the reasons why these rules work than just taking and applying different set of rules, especially with other blocks, because if you don't understand why other blocks work and why some don't, then you'd end up getting into trades that you shouldn't even get into because you identify another block. Oh, it fits the criteria, let me go ahead and jump on this trade, and then you discover that you end up with negative 1% or whatever percentage you're risking in your account. So it's important for you to understand the concept, the narrative first, and this is what this entire course seeks to cover. So if you've not watched the video on structure yet or the previous videos, I strongly suggest you go back, you watch those, and then you follow through the entire program. All right, so let's get right into it. So order blocks, first we said we're going to define order blocks. So what are they? What does an order block mean? Well, according to ChatGPT, that's where I got this definition from, because I knew what another block was. I'm going to give you the ChatGPT definition. I'm going to explain it the way I've been working with it and my understanding of another block. Another block refers to a specific range, a price range on a chart where significant buying or selling activity has occurred, resulting in temporary imbalance between supply and demand. So that's ChatGPT definition of an order block. But in other words, what it's simply referring to is just a range on the chart, right? Where there's a lot of buying or selling pressure, where those buying and selling activities have occurred, creating an imbalance between the buyers and the sellers. So these order blocks are areas which have been left, let's say, unmitigated by heavy buying or selling pressure. Basically, a lot of people refer it as maybe the last buy candle before a major sell, or the last major sell, the last sell candle before a major buyer. So let's say, for instance, we're going to be drawing candles together, guys. We're going to be drawing candles. So let's assume this is one candle and this is another candle. Let's change up the colors here. Okay, so let's assume the market was in an uptrend. So what candle should we make this? Let's make this green. Okay, let's make this green. Let's make this one red, signifying a bearish candle. Great. So let's say the market was my part 2. Let's say the market was trending in a manner like so, it's moving up, and then it got here, and then you saw something like this form, a strong red candle. Now that the order block, or what we call another block, is this last green candle. Let's change that back gray, right? This last green candle before this red candle. Okay, that's an order block. In this case, this is going to be referred to as a supply. This is a bearish order block. Okay, and then let's say the reverse is the case. You have the market's trending downwards, right? Let's say the market is going like this. Okay, let's stop here, and then you have something like this. Let's go ahead and just copy that out. Say you have something like this. Let's copy this. Yep. So let's say this is the last red candle. Let's say this is the last red candle, and then you identify this zone here. So in this case, this will be referred to as a bullish order block. So these are the two examples. This is a bearish order block, right? And this is a bullish order block. What most likely happens in these kinds of scenarios are these, or is this rather. What you'd have is you see price come back like this, trading into this region, and then once it hits this supply zone, price takes off. And we're going to explain in a minute why this happens. In this case, what happens is you see price come back down like this, and boom, takes off. Now, if you remember our last video of structure, if you haven't seen that video, I strongly suggest that you watch that video before you look at this one. I'm going to leave a link up, maybe somewhere in the top right or left corner, to that video. Now, what that simply implies is this: price is moving. Let's say these are different structural points being put into place. We have okay, and in terms of an uptrend, let's say the market was trending up, and then suddenly an invalidation occurs. It changes direction. You see a strong bearish candle, taking out liquidity. Like I said, just stay tuned. We're going to discuss more in depth about the topic of liquidity in our next video. Okay, so you see a long bearish candle takes up all of this liquidity, takes out all the buyers we have in the market. Let's use that, because let's say at every point the market was pushing up, we had buyers here, we had buyers here. So this long candle, let's say if you're a buyer, for instance, you enter the market here, your stop loss would be somewhere below, right? Or you enter around here, your stop loss would be somewhere below here. So you see a strong bearish candle that takes out all of this liquidity. And a lot of people FOMO in, oh, I'm going to miss the move. They sell here, sell here, sell here, sell here, sell here, But the best thing to do in this scenario is wait for a structural point. And then remember on our last topic on structure, like I said, if you haven't seen that video, go watch that video. Immediately you see this sort of move. What is happening here? Let me give you the narrative behind this. What is happening here is the institutions got involved, right? And this is their footprint. You see long sell pressure or heavy buying pressure into the market. That just shows you that a lot of money has been injected into the market. And then you see some form of imbalance being left between the sellers and the buyers. Remember our definition from ChatGPT? Yeah, is what it's talking about. And then what happens is they go back to mitigate their positions. Let's explain how order blocks are formed, and then maybe you get the whole narrative, you get the entire idea. What happens here is buyers, the institutions are trying to get involved in the market for a sell, right? Remember what we talked about in our previous video. Let me go ahead and do this. Let's say let me take this out for instance, and let's say we had price coming in a manner like so. And remember what I told you, they are always moving in a bid to take out liquidity. So let's go ahead and do this. Double bottoms, what do? You sell there, right? Wrong. You wait, and then you see the candle that takes out liquidity. We're going to give a set of rules for this. So you see the market moving in a manner like this, and then all of a sudden what happens? The institutions are getting involved around here, taking up a lot of money to create this buy candle. So they are buying aggressively. There's a lot of money being pumped into the market here to take out this liquidity. Let's say this was a double bottom, so retail traders are going to be selling. A lot of traders are going to be selling this price pattern. And what I want you to get your mind off is, trading patterns can be profitable, but if you really want to understand the market and trade, the smart money way, you have to understand the narrative before you even look at patterns, not retail patterns. Now I'm talking about even smart money traders do trade patterns. They say, oh, this is another block, and they go ahead and trade it. So I'm trying to shift your mindset from trading just patterns to understanding the narrative. That's why we're doing this explanation on what necessarily happens while the other block is created. Okay, so like I was saying, let's say there's a heavy buy into this pattern that has been shown here. I'm going to avoid so many jargons to make this as easy as possible. And then the next thing you see is heavy sellers getting involved in the market. So what happens is there's an imbalance between the amount of, or not the amount, between buyers generally and sellers in this market. So what smart money does is they go back to mitigate these orders, and this is our opportunity to get in off of these order blocks. When they do this, buying heavily into this pattern or this structure that we have here, double bottom, where other people are selling basically, and then you see price moves heavily for a buy, what they are doing is they are taking out the stop losses that we have here, and thereby creating or leaving behind what we refer to as a demand or supply zone. before you see price move away from that zone, and then they come back one more time, they push price in a manner to, in a bid to, mitigate those positions. That's this buy. And most times they could just mitigate just, the opening price. Sometimes it could go as high as 50%, and like I've seen other cases, they go as high as maybe 90% or even 100% mitigate these positions before price trades away from there. And these are the opportunities we have to get involved for sell or buy positions, as the case may be. So if you're looking to get involved in the market, what you should be looking at doing is getting involved somewhere around here, for your getting entered into the market somewhere around here. That's around your order block, right? You place your entry somewhere around the order block here, and then your target somewhere. We'll discuss where to place your targets later on, but let's just say you get involved into the market here. This gives you an opportunity to enter the market. Now, if you're getting lost, let's just take a brief recap of what we've talked about so far. So we started by saying we want to understand what order blocks are. This video basically is trying to help you understand what order blocks are, the different types of order blocks, and a set of rules that you're going to engage in order to trade these order blocks, or supply and demand zones as they may be called. A lot of people call them different names: FU candle, IFC, order blocks, supply and demand zones, whatever. They are the same thing, but I'm trying to get you to understand the narrative. So I said order blocks are just areas that's where there's significant buying or selling activity, where that selling activity or buying activity has occurred and resulting in a form of an imbalance between supply and demand, between the buyers and the sellers in the market, thus leaving behind this imbalance. And then what happens is the market moves correctively to mitigate this imbalance and gives us an opportunity to get involved in the market for the move, whatever it may be. It may be a bearish move or a bullish move, whatever the circumstance. But that's basically what an order block is. If you don't understand, go back through this video carefully and watch it again. Now we can have two kinds of order blocks: a bearish order blocks, as is the case here, or a bullish order block. Remember what I said: price is trading in a particular direction, it takes out liquidity with a heavy move, and what happens next is it leaves behind an area. Remember in the previous video, let's go ahead and draw that out. Let me show you what I mean. Remember on the video on structure, I said you see a move, price moving somehow like this, and then you see something like this being formed, right? And then you see price take out this liquidity. A lot of people getting involved over here in this market because they've seen a price pattern, let's say a double bottom or whatever the case may be. So what happens is price trades through their stop losses, right, and creates a zone, and this zone that was created is what we refer to as our order block or our supply and demand zone. Then what happens is we wait for price to come back into the zone, right, giving us an opportunity to trade it, and that's how we get involved in the market at an order block, right? We have two types of order block: a bearish order block, the bullish order block. So an order block that sends price down or sends price lower is referred to as a bearish order block, while that which pushes price to the upside is referred to as a bullish order block. Okay, so now we have an idea of what an order block is and the two kinds of order blocks. Now let's go ahead and look at some set of rules or principles to employ while trading these order blocks. What are the things you need to look out for when trading order blocks? All right, let's go ahead and clear all of this out. So I'm going to leave this bearish order block, but I'll clear out this one. Okay, off with you. So the first rule that I want you to employ while trying to trade an order block is this: rule number one. Let me go ahead and even write that down. Rule number one: price must consolidate before forming the order block. Price must consolidate. If you're going to write down anything, this is what you should write down: price must consolidate before forming the order block. Now, what does consolidation mean? Consolidation just refers to sideways movement. So you've seen price consolidate before that move happens, before you see the other block. Very, very important. That's rule number one. Or okay, that's not complete. Or price must take out liquidity. More on liquidity in our next video. Okay, that's the first rule. But just for the sake of this video, liquidity could appear in the form of stop losses in the market. So where you have double tops or double bottoms, where people are looking to, in the case of double tops, sell, or in the case of double bottoms, buy, you have liquidity lying below those points, or price, or areas where price tends to reverse. There are other forms of liquidity I'm going to be discussing in the more advanced class, and I'll let you know some of these areas where liquidity exists in the market. But here's a little sneak peek. You can see at the open or close of certain sessions, you have liquidity lying there, or you have liquidity on trend line. You could see liquidity there, or you have liquidity at certain highs and lows in the markets. Okay, that's a sneak peek into what we're going to be looking at with liquidity. So when you're trying to trade an order block, price must consolidate before forming the other block. That's rule number one. Or price must take out liquidity first. That's the first rule, and I'll show you samples on the chart. Okay, rule number two: when should you be looking to get involved in the market? An engulfing candle, and I'll tell you what engulfing means. Engulfing, this looks like an engulfing candle, one that completely swallows the other, or in other words, engulfs the other. An engulfing candle must form the other block. Form the other block, right? This is another rule that I tend to look out for. Now, where you have a confluence of 2, 3, 4, let's just say 3 or 4 of these rules, then it's a very, very good area to get involved in the market, or it's very, very likely that that other block is going to hold. Now, mind you, narrative plays a very important role. Where you're able to marry the narrative with liquidity, you become a professional trader. Being able, in fact, you've gotten the key to intraday mastery. If you're an intraday trader, or whatever trader you are, even if you are trading swing, or you are a scalper, whatever kind of trader you are, once you're able to marry the narrative in the market, what is happening in the market, with specific areas to get involved in the market, then you'd see your trading take a different turn entirely. So let's go back to these rules. Let's not digress. Price must consolidate before forming the other block, or price must take out liquidity. That's rule number one. An engulfing candle must form the other block. That's number two. And then let me add this one. The order block must lead to a break of internal structure, or both internal, let's use int, and external structure. Now, what do I mean by this? The markets are quite fractal, and so what happens on the 1 hour time frame is just a representation of different things that are happening on smaller time frames, right? So let me just a minute. Okay, so we have the rules. I don't know if you can see that, but what do I mean by breaking of internal and external structure? So let's say you have the 4 hour time frame, for instance, and you're using the 4 hour time frame, and on the 4 hour time frame you just see price move one bap 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 bap. Now, on a smaller time frame, what this simply means is, and we're going to make the color of this different, what simply means is you have different moves happening like this, that all came together to make this move work. So these little movements that are occurring here, on a smaller time frame, refer to internal structure. So what I'm saying is, preferably, price should take out this internal structure. The other block that is formed should take out all of this internal structure, right? And also, if possible, external structure. You can see that these were our major structural points, and price took out this external structure. These other blocks are more likely to hold as compared to others. What do I mean by this? Not all other blocks are going to work, but you should understand the narrative before trading the other block. I've said this over and over and again. Take this to heart. It's very, very important. Forgive my drawing of structure, it's very shabby, but you understand what I mean. The markets are fractal. What happens on the higher time frames are just a representation of the other things that happen on the smaller time frames. So when we're talking about internal structure, we're talking on the structural patterns that form on the smaller time frames that you are trading, as compared to the overall picture you are looking at. So when you see an order block, the move, the engulfing candle, or the next series of engulfing candles, because sometimes it could be just one candle. We're going to talk about, different variations of these order blocks, right? But that's going to be in another video. I'll create a video specifically for the different variations. This is more like an introduction to the concept of order blocks and then the basics you need to hold to trade. We don't want to go too in-depth on any particular concept, but giving you just the right amount of information to be able to trade profitably and consistently. That's what this course is all about, right? So if you want to take our other course on mastery, it's a bit different. If you're a full-time trader looking to get involved on every move in the market, understand every single move that occurs in the market, then we're creating something special for you. But if you want to just be consistent it's fine, because these concepts are what I employ to my everyday trading, right? When I'm not looking to kill it like you've seen in some of my videos, like I take the buy, the sell, and I just ride the entire move, right? That's separate. But if you want to get involved majorly, trading consistently every single day, then this is for you. Okay, so whatever structural pattern you are looking, structural points you're considering, the order block has to take out both the internal, like I've said, and the external structure, and then you look for the mitigation and get involved in the markets. Okay, so those are the rules we're following. Number one, we said price must consolidate before forming the order block, or price must take out liquidity, and I gave a very typical example of this. I said an engulfing candle must form the order block, right? Now it doesn't have to be just one candle. You can see a heavy move, it could be 2 or 3 candles, right? You could see something like this. Let me give you an example. You could see something like this happen. Yeah, something like this. You could see something like this. There are several variations, all right, but you just have to understand the concept. You have to understand what's happening here. That's what I want you to know. So that's another rule, and the order block must lead to a break of internal or both internal and external structure, right? If you have any questions, go through this video again and let me know. Okay, so those are 3 major criterias that I look out for while trading an order, or while considering an area as an order block. So let's go ahead and look at some of these things on the chart. Remember what I said: must consolidate before forming, or an engulfing candle must form the other block. The other block must lead to a break of internal structure, or both internal and external structure, and then wait for the mitigation, and then we take it, right? Okay, so let's look at the charts now. Okay, so looking at GBP USD, let's go ahead and consider this example. For instance, I marked out this area as another block, so let's jump down time frames. Let's look at 15 minutes and then probably the 5 minutes time frame. Let's see the opportunities that presented themselves here. Okay, great. So what do we have here? We see a consolidation. We see price sell through all of this move, right, taking out all the buyers with this heavy move. Another block was created. Let's jump to the 5 minutes to see that last sell candle before the buy move. Let's do that. We gotta hurry. Okay, so yeah, this was that sell candle, and then we have the buy. This is the engulfing. There are different kinds of order blocks. I don't want to go too deep into all of that right now, but this was a move out of that zone immediately after liquidity had been taken, right? 1, 2, 3. There's a name some people call this, some people refer to this as a railroad track. I think that's on the LPC systems. I got this idea from LPC, right? So but this is basically an order block. We saw price move away from there, and it took a while, but after some time, what do we have? we see price trading back into that zone, and immediately price just approached about, the opening of that OB. We can see that huge move out of the zone, and this was your opportunity to get involved in the market. Okay, I don't want to go ahead and draw that for want of time. So we're going to close the curtains here today on other blocks. But if you have any questions, leave them in the comment section, or you can just drop a question for me personally at the community. I'll drop a link to our community right in the description of this video. So see you in the next video.